Good morning, dear students. Welcome to the home mentoring session of accountancy. Myself, CSK Khanna from the SD Vidya School of Balakand. Dear students, today we will practice more numerical relating to the topic of change in profit sharing ratio. Dear students, I had already shared number of numericals and their solutions, how they to be solved. Let's discuss one more numerical problems relating to the change in the profit sharing ratio. Now see this important question number 44. We say Anshu, Anju and Anupama are partners in a firm sharing profits in the ratio 2 to 1. Their balance sheet as at March 31, 2019 was as follows. You have been given the balance sheet. Then Anju and Anupama decided to share the profits equally with effect from April 1, 2019. For this purpose, it was agreed that the goodwill of the firm should be valued at rupees 60,000. Land should be revalued at rupees 3 lakh and building and plant should be depreciated by 5%. Stock be valued at rupees 2 lakh 25,000. Creditors amounting to rupees 2,000 were not likely to be claimed and hence should be written off. You are required to record the necessary journal entries to give effect to the above agreement without opening revaluation account. You have also to prepare the capital accounts of the partners and prepare the balance sheet of the firm after reconstitution. Partner decide that general reserve is to be transferred to capital accounts, whereas revised values of assets and liabilities are not to be recorded in the books. Dear students, I told you very clearly that please understand how the agreement goes to that. And there are two options. If the partners want to distribute, if the partners want to transfer any element or any variable, then the answer will be to the old partners in the old ratio. But if the partners do not want to record in the books of accounts, then we have to find out the gaining and sacrificing ratio, and automatically we have to record the adjustment entry considering giving a debit to the gaining partner and credit to the sacrificing partner. Let's understand this question. Here it says partner decide that general reserve is to be transferred to capital accounts. So automatically they have decided. So here we have to just go that amount of general reserve to be credited to the old partners in their old profit sharing ratio. This is known as the old profit sharing ratio 2 to 1, and the new ratio is known as this one, that Anju and Anupama decided to share the future profits equally. So this is the new ratio between Anju and Anupama, that is equally. Now what we have to do for general reserve? Simple journal entry will be recorded. General reserve account debit with 48,000 to Anshu, to Anju, to Anupama, and it is transferred in their old profit sharing ratio, which is 2 to 1. So entry will be general reserve account debit 48,000 to Anshu's capital 19,200, to Anju's capital 19,200, to Anupama's capital 9,600 in the old profit sharing ratio, that is 2 to 1. Now come towards the second part. Whereas revised values of asset and liabilities are not to be recorded in the books. What it means? That for this we have to first calculate the result of the revaluation of the assets and liabilities, and then we have to find out the gaining and sacrificing ratio, and accordingly we have to record a journal entry which is known as an adjustment entry, how gaining partner to sacrificing partner with the share of the result of revaluation. Now here the goodwill of the firm should be valued at rupees 60,000. Nothing is mentioned about that. So what we will do? We will also have the adjustment of this amount of goodwill, but first we will go for the revaluation of assets and liabilities. Land should be revalued at rupees 3 lakh. Here the land value is given 2 lakh. It is appreciated by 1 lakh. So it will be credited in the revaluation account. See here, rupees 1 lakh on account of the land. Second element say here that building and plant should be depreciated by 5%. The value of building is given 80,000. 5% depreciation 4,000, it is a loss, so automatically it will be debited. Likewise, 5% depreciation is also to be on plant. The value of plant is given 1,60,000. So of 5% of this, that is 8,000. Again, it is a loss, it is also to be debited here. Land appreciated, credited here. Depreciation on building and plant, it is to be debited here as it is a loss. Then stock be valued at rupees 2,25,000. Value of the stock is given 2,10,000 in the balance sheet. It is recorded to the 2,25,000. So it has the appreciation of rupees 15,000. So it will be credited in the revaluation account 15,000 as part of appreciation in the value of stock. Then creditors amounting to rupee 2,000 were not likely to be claimed and hence should be written off. It is the income of the business because it has not to pay rupee 2,000 to the creditors. So as there is decrease in the creditors or liabilities, it will be credited to the revaluation account. So we will credit 2,000 in the revaluation account. After this, what we will do? We will have the result of revaluation account, and we had calculated here that there is profit on revaluation of rupees 1,05,000. Credit side is exceeding to the debit side. The profit on revaluation is 1,05,000. Now, how this profit is to be dealt with, that is very important to understand depending upon the condition here. Whereas revised value asset liabilities are not to be recorded in the books, so we have to find out first gaining and sacrificing ratio. Here, when we calculate gaining and sacrificing ratio, old ratio is 2:1 as it is given in the statement 2:1. New ratio is equal among the partners, so it is 1:1:1. So when we calculate the ratio of sacrificing and gaining, we will find that Anshu and Anju, they are sacrificing to the tune of 1/15, 1/15, and the third partner Nupma, she is gaining 2/15. So as per this, what we have to do? Gaining partner's capital account should be debited and sacrificing partner's capital account should be credited. Here, of what? Here we have to first see about the revaluation result, that is 1,05,000 on account of the revaluation profit. And second thing is very important, see amount of goodwill, that is 60,000 here. At the beginning I told you that we will deal it with later on. So here see, goodwill of the firm should be valued at rupees 60,000. So this 60,000 will also be adjusted through the adjustment entry. So the total amount which is to be adjusted, 1,05,000 of the profit, 60,000 of the goodwill as it is given here. So total it will be 1,65,000. Now sometimes instead of revaluation profit, there may be revaluation loss. So that loss will also be adjusted here and net effect to be taken here. For example, there is loss on revaluation of rupees 45,000. So the net amount comes out at rupees 15,000 instead of here 1,65,000. So we have to see that what the result of revaluation account is here. If it is profit, we will add to this. If there is loss, then automatically we have to subtract it. So here 1,05,000 in this particular question is of revaluation profit plus amount, 60,000 of the goodwill. So an adjustment entry will be recorded to the tune of rupees 1,65,000. And how? 1/15 sacrifice of Anshu, 1/15 sacrifice of Anju, and 2/15 again of Anupma. So here the partner who is gaining to be given the debit and the partner who is sacrificing will be given the credit. We will calculate 1/15 of 1,65,000, 1/15 of again 1,65,000, and 2/15 of 1,65,000. This amounts to 11,000, 11,000, 22,000, and accordingly a journal entry known as adjustment entry will be recorded. Anupma, she is gaining by 2/15. She has been given a debit of 22,000. Anshu and Anju both are sacrificing 1/15 and 1/15. A credit should be given to them. Now, this way we had adjusted to the value of assets and liabilities on revaluation and the amount of goodwill. Now come across to the preparation of the partner's capital account. By balance BD, these balances are given. 2,40,000, 2 lakh and 1,60,000 being credited. By journal reserve of this first entry, 19,200, 19,200 and 9,600. Then the effect of this entry will be taken. Nupma's capital account will be debited with 22,000. How it is to be debited? 22,000. 11,000 credit is given to Anshu here. 11,000 credit is given to Anju here. And total 22,000 debited to Anupma according to the posting of this journal entry to the capital account. 11,000 credit given to Anshu and Anju. They got this credit. 22,000 total debit was given to Anupma, and then we will calculate the closing balances in the partner's capital account. We had find it out 2,70,000, 2,30,200 and 1,47,600 at the closing capital balances. Now what we have to do? We have to prepare the balance sheet of the firm after reconstitution. Now when we prepare the balance sheet of this firm, please note down, they had clearly mentioned revised value of assets and liabilities are not to be recorded in the books of account. So you will see the value of assets and liabilities is the same as in case of the original balance sheet prior to reconstitution. The value of all the assets here, they are same as in the original balance sheet it is given here. Now we will check about the liabilities. Creditors 65,000 here as it is given. Bills payable 7,000 as it is given. For general reserve as it is to be distributed. Note down, for general reserve they will not be shown because it is already credited to the partner's capital account. So we will not show the general reserve here. And the revised capital balances to be shown here for Anshu, for Anju and for Anupma. Now when you will total this balance sheet, you would find that this balance sheet total will agree with the same amount as of the original balance sheet without the reconstitution. So this way we had learned how to make the revaluation account, how to make the partner's capital account, how to make the revised balance sheet after the reconstitution of the firm, and we had also recorded the journal entries depending upon the condition given in the question. Dear student, this question is also very important in the CBSE examination. This may be asked for the 6 marks. So I request you kindly practice all these questions for your CBSE final examination point of view, and otherwise they are also very important. In our next class, we will start into the next lesson, that is admission of a new partner in the firm. Thank you very much for watching these videos and attending the regular classes. Once again, a wonderful day to each one of you.